Here are our depreciation methods. As what we've discussed, there are various depreciation methods, and it would depend upon management's judgment as to the best method that would show or reflect the expected pattern of consumption of the future economic benefits embodied in the asset. Now, that particular benefit or economic benefits can be financial, can be quantitative or qualitative depending on the case. And whatever that method is, such should be applied in consistent manner. And of course, it can be changed accordingly depending on the case. Changes of depreciation methods will be discussed shortly. So for the common examples of the depreciation methods, we have straight line, diminishing balance, and units of production. And basically, these are also the representatives of our major classifications of depreciation methods. We have the constant charge for straight line. We have the decreasing balances or balance method for diminishing balance or declining balance, while variable charges method for units of production method. And you will know that there's more. In fact, for decreasing balances, we also have our sum of the years digits method or SYD method. As explained also in the previous videos, that PAS 16 prohibits the use of a depreciation method that is based on revenue. So that remains to be seen though, if ever there will be an update in the future. But so far, it's based on revenue that is not allowed. Since revenue is affected by selling activity, so there can be fluctuations in terms of sales volumes and prices, inflation, and other inputs of processes. So all of those mentioned have no bearing on the way the future economic benefits of an asset are to be consumed. And there is a mention here that in case of any change, let's say for useful life, the method of depreciation and residual value at year end based on the annual review, then we have to account for that or those changes as a change or changes in accounting estimate that would benefit current and future accounting periods because they are to be accounted prospectively. So here are our common methods as discussed. We have constant charge, we have declining or decreasing balances, and we also have our variable charge method for units of production method. So let's see our examples. For straight line method, basically, this is based on the passage or function of time. And because of the passage of time, the value of the asset decreases since it is also used. That's very true for property, plant, and equipment items. The recognition of depreciation is recognized evenly over the useful life of the asset. So meaning the periodic charges are equal over the years. To compute the annual depreciation, that's depreciation amount, which is actually our cost less salvage value or residual value divided by the useful life. So example, under straight line method, we have for ABC company, the equipment has a useful life of 4 years, residual value of 20,000, and total purchase cost of 100,000. So to compute the annual depreciation, that's simply cost again minus residual value divided by 4 years of useful life equals 20,000 annual depreciation. And when we construct the depreciation table with date, depreciation, accumulated depreciation, and current amount columns, then this is how we are going to get the amounts. Depreciation would be constant. Accumulated depreciation is the sum of all depreciation expenses of the previous year or years and the current year. So example, for December 31, 20X1, this is the first year, depreciation expense is 20,000. And because this is the first year, so no depreciation expense in the prior year. 20,000 plus 0 equals 20,000. And then for 20x2, that's going to be another 20,000. So accumulated depreciation for 20x2 then will be the sum of the two 20,000s. And so it's 40,000 and so on. For the carrying amount, that would be cost less any accumulated depreciation. Take note, guys, that what is written here is cost, not the depreciable amount. To get the carrying amount, also known as carrying value or book value or net book value, the formula is really cost minus accumulated depreciation and also accumulated impairment losses. That will be tackled in the latter terms, so example semifinals. And then for the purposes though of computing the depreciation, we use the depreciable amount, which is cost minus residual value. All right, so uniform charges or constant charges for straight line method. Now we have to take note also that accumulated depreciation is a contra non-current asset account to property, plant, and equipment. And it shall be presented as a deduction from the cost of property, plant, and equipment items to get the book value or net book value or carrying value. Also, it's very important to take note that we go back to the table that at the end of the 4 years, it should be that the residual value is here. It is at 20,000 pesos. All right. Then to continue, we have the entries. So to record the transaction, that is simply depreciation expense minus accumulated, or sorry, credit rather to accumulated depreciation of 20,000 pesos. So I repeat, debit depreciation expense, credit accumulated depreciation of 20,000, and this would be the same from 20x1 to 20x4. All right. Next, for accelerated depreciation methods, also known as decreasing or declining charge or balance methods, obviously, the depreciation charges would actually decrease over time or over the useful life of the asset. And this follows that earlier years would have higher depreciation methods, while the latter years would have lower depreciation methods. Then the philosophy here is that because the functional productivity and capability of our assets would be higher in the earlier years, therefore, they should also be depreciated more or higher on the earlier years. And here are our two examples of the methods, SYD and double declining balance. For SYD, sum of the years digits depreciation, we are going to develop fractions out of such, in which the numerator would be the highest or the greatest n number of the years or useful life of the asset for the first year, lowest on the last year, and the denominator of SYD will be using this particular formula. Well, basically, the denominator is just the sum of the n number of years. Example, there are 3 years. So the denominator is simply the sum of the years, the n years. So 1, 2, and 3. That's 6. That's the total. So the fractions then, first year would be 3 over 6. Second year would be 2 over 6. And third year would be 1 over 6. However, is going to be challenging if ever, for example, we have 20 years or 50 years, right? So can we just imagine the burden of adding from 1 to 50? So there is already a formula being devised by mathematicians so that it will be easier for us. So to get the total, that's simply or the total of the digits from 1 to 50, or first 50 digits, that's simply life, or whatever is the number of the digits, times the quantity life plus 1 all over 2. So if that is like 50 years, that is, let's check. So I'm going to give you 30 seconds if ever you are following. So let's say there are 50 years, or there is a useful life of 50 years for a building. So how much would be the denominator? Let's check if you are listening in, let's say 30 seconds to 1 minute. All right, it should be that you'll be getting 1,275 as SYD denominator. All right. Anyway, so moving on or forward, thank you for sharing. Next, for sum of the year's digits method, here it is. We still have to use the depreciable amount to compute the SYD depreciation. For 4 years, the sum of 1, 2, 3, and 4 would be 10. And our depreciation fractions for SYD would be for first year 4 over 10, second 3 over 10, and so on. And to get the depreciation, that is simply multiplying the depreciable amount by the SYD rate. So we get the depreciation. Accumulated depreciation is still the same concept wherever we go. That's the total of depreciation expenses. And the carrying amount is simply cost minus our accumulated depreciation. We can also notice that the depreciation decreases over the useful life of the asset. And then if we have residual value, also known as scrap value or salvage value, then it should be shown here at the last year that there is 20,000 pesos. All right. And we record our depreciation expenses. Debit depreciation expense, credit accumulated depreciation of 32,000 and 24,000 each. All right, then next to that is double declining balance method. For double declining, the word is double. That's why our numerator would be 200% or 2. If we express 200% into a whole number, that's 2. What is unique in this certain depreciation method, or this particular method, is that instead of using the depreciable amount, we are going to use the carrying amount to get our depreciation charge or depreciation expense for that particular period. Then in also our computation, we ignore our residual value. So remember, in getting the carrying amount, that's cost minus accumulated depreciation. So in that sense, we ignore the residual value to get the depreciation expense. So for SYD, let's say, remember, to get the depreciation expense, that is our depreciable amount multiplied by the SYD fraction or rate. For declining balance, that would be carrying amount, ignoring the residual value, times whatever is the constant rate. So if it is double declining rate or the double declining balance method based on the method, then that would be 2 over life. Okay, let me ask you once again, this is going to be easy. If ever the life is, let's say, 10 years, what would be our double declining rate in 10 seconds? 10 years. You can also even do this like mentally, even not using calculators, right? All right, so there are already responses. Yes, we can express either in decimals or percentages, no worries. So that is right. That is 20% and or 0.2. Very good. Next, what about if this variation 150% declining balance method using or having the same n number of years, which is 10 years, what would be our percentage? All right, it's true that it is 0.15 or 15%. Very good. Also, if it's simply declining balance method, no double, no 150%, it simply means it is 100%. So 1 divided by 10 is 10%. And these are the three common examples: double declining, 150% declining, or 100% declining, or simply declining balance method. Now, here is our example. Let's say we have a purchase cost of 100,000, and then we also have a residual value of 20,000 pesos using double declining balance method. So we use again the formula 2 over life, that's 40%. And we now construct the depreciation table. If we can see our respective carrying amount here, this is quite unique presentation. In the previous two examples, straight line and sum of the years digits method, remember that the carrying amount is on the last part. But here, anyway, it's shown after the rate. So the rate is 40%. And then the carrying amount, or initially the carrying amount, of course, is going to be the cost at the beginning, 100,000. Then minus the depreciation expense of that period, which is also the accumulated depreciation, equals the carrying amount. But let's check. It's January 1, 20x1. So 100,000 times 40% is 40,000. Same for ACDEP. And so our carrying amount at the end of 20x1 would have been 60,000 pesos, right? Because it is January 1, 20x1. So supposedly this is January 1, 20x1, 100,000 minus the 40,000 equals 60,000. So simply like extend that one level up. Then for 20x2, that's going to be 60,000 times 40% equals 24,000, right? So our ACDEP would be the total, 64,000. And then if we deduct that from 100,000, so our cost carrying amount would be 36,000. Take note that this can be confusing for declining balance method. So that's why we simply have to show or make the table and then determine the carrying amount. Anyhow, that's 36,000. So the 36,000 carrying amount in 20x2 will be used in computing our depreciation expense for 20x3. So multiply that again with 40% equals 14,400, thereby making the total accumulated depreciation of 78,400. Question, do we still have a certain carrying amount? Yes, let's check. 100,000 minus 78,400, that's 21,600. We go back to the problem. The residual value is 20,000 pesos. And we said that at the end of the useful life or close to the end of useful life, it should be that there is 20,000. So here, remember that at the end of the 4th year, it should be 20,000 pesos. Therefore, the depreciation expense of our 3rd year should be 1,600 only in order to make our ending balance or carrying amount to be 20,000. So the target is 20,000 and we have a balance of 21,600. Therefore, we squeeze simply squeeze 1,600. Will we have this in our examination? I suppose not, that we will really be tested at the end. However, at least we know how. We can see it on the table. So that's the point that I'm driving at here. All right. So that's how we get it. And then what about increasing depreciation charge under double declining balance method? So when the double declining balance method results to a larger depreciation charge in a year compared to the previous year, then we use only the assets carrying amount over the remaining useful life under the straight line method to eliminate the increasing charge. So example, we have the following given items. And then we can notice here again with the same concept. So example, the percentages being multiplied to the respective carrying amounts. This is a much better presentation, guys, unlike a while ago, wherein it's not of the same level here. Here, it's typically same here, right? Carrying amount is not stepped upwards. So supposedly it's 100,000 here. Anyhow, I like this presentation at the bottom, wherein carrying amount is stepped upwards. And then, so just simply follow the formula or format to get. Notice that in the above table or the table above, the carrying amount of the asset as of December 31, 20x5 is not equal to 0. It should have been 0 because the asset does not have a residual value. It's very true, correct? So this is also a situation. And then also the total depreciation charge is understated by 15,552, which is the ending balance. That's also true. I would say though that this situation is not a common one, since normally I've noticed that in answering problems, what will happen is the first case wherein the carrying amount is no longer enough to have another multiplication of the carrying amount and the declining balance rate. So that's the usual case. Here, it so happened that there is still a balance even after a series of multiplication. So in that case, if we do that, the depreciation for 20x5 would be 25,920. Like we want this to be 0. Like we want this to be really equal to 0. So meaning we adjust our depreciation expense. That's one thing. However, this would violate the concept of decreasing charge, the concept on which double declining balance method is based. Very true that really there would be decreasing charges. So in that case, what we do is that whatever is the carrying amount, it shall be depreciated over the last 2 years using the straight line method. So last 2 years, meaning 20x4 and 20x5. So to be able to go there, we need to be able to construct the table first. And this is how we are going to compute. All right. So we will continue for the next video for the continuation of our discussions.